following is an update and technical analysis on the Nasdaq 100 futures based upon the CME exchanged off the daily interval. And I'm going to deep dive as well into the US Tech 100 futures, the S&P 500 futures, the Russell 2000 futures, as well as the 10-year yield futures, which has become an official warning sign, not for the economy, but as an indicator pointing to diminishing demand and or anticipated rise in the supply of long-term U.S. government bonds. We'll start off right out the gate here, and we've had some key reactions right across the board. We had this primary reactionary uptrend line off the March reactionary lows there, just a massive amount of reactionary lows to strengthen the validity of it. And I had mentioned going right back into this key range, and the 15,980.76 price resistance would offer an objective short trade entry within only an extension of this divergent high, negative and bearish divergences that had continued right here in the near term to establish. And that was felt with a wave of selling, bouncing right off the key 1540-630 price support there as well, especially if you're an active and or day trader, really to the button. Talk about a continuous reaction on a continuation rally, 2-day, 3-day rally there. It was good for 2.7% in gains, and a single day netted you close to 9/10% there. And again, just reactions and key levels to follow and watch. And I had remained critical in that previous video. You wanted to see a nice, clean, red candle, daily candle close right below this primary trend line, and we got that sell signal. Nice, clean sell signal, primary off that primary reactionary low up trend line, and we need a back testing it. The bottom of the primary trading range, 1, 2, 3, 4 days in a row there, and was rejected impulsively off that key inflection point. And we are sitting on some big price support level now. Off this primary reactionary high downtrend line off the November 2021 reactionary highs. And it is validated with a significant near-term reactionary lows 3 days in a row, which was successfully defended. And we did close right back above that key inflection point. So we are trading right above it as of now with the 50-day moving average, synchronizing with that primary downtrend line. And we are just stuffed in a corner there, waiting for that next move, especially if you're a long-term swing trader right off that resistance zone. Thus far, knocking that 50-day moving average for a 4.7, almost close to a 5% crash there. And these are just your near next levels to aggressively watch, and that need to be highly respected as far as short covering goes, as far as playing any long bounces, day trading, and or some of the key long trade setups for another near-term short trade setup. Pretty significant price support there with a multitude of reactionary highs and lows. Call it a multi-year price support there. And that is a big key inflection point to watch. I believe if we have another daily solid candle close below that key inflection point, which would, in my opinion, start to usher in a much larger, stronger wave of selling down to the 14,871, 48 price support there. And again, pretty strong support there as well. Decent price support there. Just a multi-year inflection point with just a plethora of reactionary highs and lows to validate that initiation by all historic means. And if we snap that level, then we're going to go on to probably hit that 439.97 price support, which correlates with the 618 fibs retracement, call it 14,400 there. And that is another key inflection point to watch. As powerful as this rally was, where a lot of leverage that potentially needs to be washed out once you have a strong wave of buying of that magnitude in that direction, where long traders and margin traders and excess leverage traders think that price could never come down, put in a sell signal, and it could be a strong, big wave move to the downside if and when we get there. So we'll see what happens. We have a oscillator. We have the moving average convergence starting to hone in on the zero line thresholds there as well. We already have the oscillator down below its zero line currently, and still need to have extreme oversold conditions in the RSI, and we're nowhere near that. You could even make a case for a pretty significant price support there for the RSI divergence. And again, I would only suspect not only a key inflection point within the technical momentum indicator dimensions, but a strong primary downtrend line there of support. So the risk reward ratio lies heavily to the long side as of now. For bull traders and long traders, need to puncture right back into that, come punching back against the ropes and puncture that bottom of that primary trading range there, and move right back up to re-challenge that 15,980.76 price support there. So again, you do not want. It was an aggressive short trade setup off the bottom of that trading range, but again, this a nice clean breakdown off that sell signal, and the 15,980 price resistance was the key spotlight. and opening up that short trade position. I'll zoom in now to the US Tech 100 cash futures here off the daily interval. Same picture here. Nice clean divergent high, bearish divergences constructed and established amongst all three technical momentum indicators there. Again, we are hovering on the 15,281.60 price support there, and it looks like we're starting to whipsaw that reaction. Multitude of reactionary highs there, reactionary lows that have been defended 3 days in a row there, especially for an active and or quick day trader. Again, almost good for a whole full percentage bounce there. Nice clean bounces, especially if you're just playing it alongside and looking for those 1.5% moves in a single day there. But again, this is a big level to watch off that 15,281.60 price support, which is extremely validated with those with the multiple reactionary lows that infused off of that key inflection point. And that is definitely something to watch there, where the risk reward ratio again still lies to the long side. Whereas you could have a nice potential snapback, counter trend rally right back up to that 15,718.90 price resistance correlated with the 786 fibs retracement for a nice clean short trade setup to the move to the downside. Call it an aggressive short trade setup. One of the most beneficial short trade setups that I could potentially see. So we're just slight rejection, but honing in right back up to that to the bottom of that primary reactionary uptrend line with a ton of reactionary lows to strengthen validation of that inflection point and a reactionary high. That would be the ultimate short trade setup, in my opinion, for full position short trade off the 16,002 price support. Call it dual line of support there. And that would be a nice key inflection point for a nice short trade setup for a much larger move to the downside. Anything's possible. We could snap this key inflection point now, whereas you were short on the top here. Remain short throughout this consolidation phase. You have a big inflation numbers starting to come out on Thursday, and that would be a nice move to the downside. If we split that, that is even larger price support there off that 618 pips retracement. Call it 14,938 price support, where bull traders and or long traders need to defend aggressively at all costs to avert further damage in some of these key technical momentum indicators. Well, you'll have a potential plunge below their zero lines there, and just have a longer term daily interval damage amongst those key technical momentum indicators, where the oscillator is already starting to print below that zero line as well. So we'll see what happens as far as that case goes. But again, that is a big level to watch, and I would only suspect some sort of potential bounce, potential dead cat bounce, single day and or active day trading stuff there. Zoom into the S&P 500 futures here off the daily interval, and I mentioned how imperative it was off this parabolic primary uptrend line, just a strong validation off of these of a ton of reaction here, and again, nice clean divergent high, put in that divergent high, eclipsed and broke down right off that key inflection point, put in a sell signal there, and we have been stair stepping and reacting amongst some of these key inflection points as well. That is a highly diversified index there, and just something to watch, where you have the bearish crossover and the average convergence honing in on that zero line threshold as well. Nothing new there to watch, but again, bull traders, long traders need to defend the 44.40 price support really at all costs there, and I believe that to be a multi-year key trading inflection point that with just a very strong wave of selling if broken, that will usher in another big, much larger wave of selling down to the 43.29.90 price support there, correlated with the 618 fibs retracement, and that is a big, much larger key level that needs to be defended heavily at all cost. Where as well as you could put in a potential head and shoulder looking top here, where you have your head there, a much larger move, which would be the split and the primary neckline of that key inflection point there. But we'll see what happens as far as that case goes. Long traders, bull traders, they want to step in. Can't make the case for an S&P 500 future long here. Anything's possible. You could set some tight stops, set on a tight leash of these undercut of these previous lows there for a prolonged move to the upside, and maybe challenging the 45.79 price support. But again, that's very practically in here in no man's land, and I do not have a strong case for any of the long trade setups here. Moving into the US 2000 Russell 2000 futures here, big key inflection point that I had stressed in that previous video. It was the primary reactionary concealed hidden primary downtrend line here, just a massive amount of reaction right across the board there, and that was a nice clean, put in a nice clean divergent high. We never solidly popped back above that key inflection point, whereas we had a more of a half quarter length candle close above it, and were rejected pretty impulsively the next day, danced amongst this key 1954 price support here, and just hugged on for dear life there, and we closed steadily below it as of now. And again, that is a it would look like it was going to be a pretty big move there. That is still remains that first target at 18.99 price support, and that is a pretty significant price support zone there. And again, if you're shorting for the top of that trading range, that was good for a 4% crash there. Still honing in for that next target there. which could potentially correlate with the primary minor uptrend line here. If and when we get there, that would be a nice clean, especially if we break right through that 18.99 price support. Could be a nice clean bear trap here. Sucker in a lot of those short trade setups and or bear traders right there. Not even visualizing the minor uptrend line there for a prolonged move to the upside and re-challenging the 1954 price support and the primary reactionary high downtrend line. Again, I cannot make the case to go long here up against that resistance. Resistance is resistance until taken out, and that is a big key inflection point that I would not want to go long into, rather than waiting for a potential break above this primary reactionary high downtrend line and then making the case to go long if and when something like that of an official trend ends up escaping in that direction. And then finally, I'll take you out to the 10-year U.S. Treasury Yield at a significant price support level here, whereas you have a pretty strong case of this primary reactionary uptrend line correlated with the 3918 price support there. That is a big key inflection point, whether bonds end up selling off or we end up getting the flight to safety, putting that sell signal on the Treasury Yield there, and then that would obviously come with a big bidding of a huge bidding of the 10-year bond, and then ultimately re-challenging that key inflection point. Nice to short the yield there if and when we get that solid daily candle close there for a sell signal short trade set up on the 10-year Treasury Yield there. So we'll see what happens. I'll keep you updated if I see any more significance here in the charts. Congrats if you took these short trade setups and validated off of these key inflection points and utilized some of these price support and resistance levels to maintain a profitable focus here on your active trading account.